Hey everybody, my name is Brandon from StockSnews.com, and today I want to talk about Lucid Motors stock, ticker symbol CCIV. What I want to do first is go into Google and talk about the macro picture that's surrounding the stock, and then I want to go into the fundamentals to talk about how Lucid is doing as a business, and then I want to go into the trading charts to see if there's a level or two to buy Lucid if we want to buy Lucid. So now let's get started. So before we start the video, just quickly, I will be holding our first office hours this Saturday. Basically, come join our free Discord server, the link is in the description, and I will hold a free video chat on Discord 7 to 8 p.m. Eastern Standard Time this Saturday. Come join and ask me all the questions you want. So with that said, here's a 6-month view of Churchill Capital's charts here, also known as the Lucid Motors. We can see here that from our $10 a share base SPAC value, we really climbed up to Mars here up until February when we were up almost 500%. But then we started falling back to earth about 60% in about 3 months after Churchill Capital confirmed that they were indeed going to merge with Lucid Motors. So ever since then, we've been falling about 60% in 3 months. So the question is, will we ever return to these price valuations up here? Well, to get a good sense of where Lucid is right now and the general sentiment around the stock, we can take a look down here at the news of what's going on around Lucid Motors. And from this, we can see that there is actually a mixed sentiment around the stock. Some journalists say that they like Lucid stock, like this article right here, while others say that the EV market may be fatigued, so there could be some more downside risk for stocks like Churchill Capital. So because we're getting two different views in the news here, let's first go through the arguments of the bear case, or the people who do not like the stock. And the main reason why I think people do not like the stock is because of valuation, like this article from Seeking Alpha says. So we can see here that the journalist of the Seeking Alpha article has done some math and came out that Lucid was at around a $35 billion valuation, and that is a lot of billions of dollars for a company who's not selling anything at the moment. More on that later, but if we look at their picture from the S4 filing, the document that explains the terms of the merger, we can see that Churchill Capital common shareholders, or the investors that bought CCIV stock, is only making up around 2% of the company. Honestly, the management team of Churchill kind of shafted the shareholders here, because if someone was a CCIV shareholder, you want as much of the company pie as possible. But you can see that a lot of the company pie is instead being kept by Lucid itself, and another large majority is going to these PIPE investors. So not really what I want to see if I was an investor in CCIV stock. So really, the bear case for Lucid to me is valuation for a company that currently is not manufacturing cars to sell yet. That brings me to the S4 filing itself, when Lucid Motors, in their own words, are saying that they have no experience to date manufacturing vehicles. For me, this is the biggest downside risk of Lucid at the moment. In order to sell cars, you need to manufacture those cars to sell. And I promise you that that is not an easy problem to figure out. It takes a lot of time, and most importantly, it takes a lot of money. But that said, because Lucid was able to merge with Churchill Capital, they now have capital to invest. As a shareholder, you need to be aware that there could be setbacks when they start manufacturing at a large scale. Again, nothing against Lucid here, but this process is incredibly complex, and even the smartest people in the world can make mistakes here. But with all that said, if we remember another bear case that was mentioned in one of the Google articles that said that there was EV fatigue, meaning that the author of the article thinks that people were no longer interested in EV cars, to that point I definitely disagree. And that transitions us to the bull case argument for Lucid Motors. With the EV market, as I've said before, there are an incredible amount of people now interested in buying EV cars. Now, with the current presidential administration in the United States, there could be a lot of incentive to invest in green energy, and electric vehicles are definitely a sector that could benefit. Because of that, the total addressable market, or the amount of people that could ever possibly buy an electric car, is about the same as the number of people buying cars today. And Google says that that number is around 228 million people as of 2019 in just the United States alone. So because of that, with a huge total addressable market like that, if Lucid can manufacture cars, and even if they are only able to capture 1% of the total addressable market, which is about 2 million people, Lucid will still be making a lot of money and will likely have good business. But that said, I do want to quickly mention competition. GM, Volkswagen, Ford, and a small company called Tesla are making EVs as well, and will all be competing in this total addressable market in the United States. You should be thinking about if Lucid can compete against those giants who are already manufacturing and selling cars. The next thing I want to talk about for Lucid's macro story is the fact that they are going after the higher end market of electric vehicles with a selling price of the cars over 100,000 United States dollars. And honestly, I actually think that is a very smart idea. When making luxury cars or luxury goods in general, there's actually a phenomenon in business and market psychology when pricing luxury things too cheap. That will destroy your business. Here's an article from a non-professional website, but I think that the points that the author makes are actually pretty good. I encourage you to read about this phenomenon, but the main idea is that if you have a luxury product and price it cheaply, then your customers will think that it is cheap for a reason and will think that your product is a low value product posing as a high value product, and thereby your customers will not buy your product. Just an example to make this point a little clearer, imagine you're at Walmart and there's two identical tennis rackets, one priced at $99 and another priced at $10. If I told you that one of the rackets was made from really good high quality plastic and could make you play like Roger Federer, while the other racket was just made from okay plastic that just makes you play like a bad to average person like me, which one would you say is the racket that makes you play like Roger Federer? Well, for me and a lot of people, instinctively I would say that the $99 racket is the Roger Federer racket. I'm paying more money, so I should be getting a better quality racket, right? Well, not necessarily, and this is the main point I want to make in the video here. People assume that the more expensive thing has a higher value because people rationalize the higher price with a higher value. This is market psychology at work, and this is not necessarily always right. This is why I think pricing Lucid cars at a higher range is a smart idea, not to mention the fact of the positive effect that it will have on the profit margins when they finally sell cars. So speaking of profit margins, let's talk quickly about Churchill Capital's and Lucid Motors' most recent filings so that we can talk about the fundamentals of the business. So here we are in Churchill Capital's and Lucid Motors' S4 filing, and we can see that honestly there's not a lot to talk about here. But what I want to point out is that they are spending a lot of money on research and development. You can see that Lucid is spending around $511 million on research and development, and that is what I like to see if I was an investor in Lucid. I want to see them shoveling tons of money into research and development because that means that they are investing in their product for the long term. Again, exactly what I want to see as an investor, especially compared to the fact that they are only spending around $89 million in sales, general, and administrative. Because we're not manufacturing or selling any cars yet, I don't really want to talk about the revenues or the cost of revenues because these numbers will change dramatically once Lucid starts manufacturing. So with all that said, let's head on over to the trading charts to see if there's a level or two to buy Lucid if we want to buy Lucid. So here we are in Lucid's trading charts, and we can see that we've really consolidated to this low 20 support level after falling from our highs back in February. We can see that this low $20 support level was made from these candles over here, the bottoms of these candles over here, and the tops and bottoms of these candles over here. So because we've hit this level a few times, I'm fairly comfortable to say that this is a pretty strong support level. If I was looking to open up a position in Lucid Motors, the place where I would do it is just below the $21 level. If we can see here, Lucid has really touched below the $21 level a few times in these candles over here, as well as these two candles over here. So as that is about 10% away to the downside from where we are right now, I think that that would be a good place to look for as an entry point to Lucid. Moving on here to the MACD, we see that the MACD is actually very flat, so that's not really telling me that much. Of course, the math of the MACD may have gotten a little bit fuzzy because of the huge momentum spike back in February. Because if there is a huge momentum spike like we got over here, then any other momentum signals are considerably smaller comparatively to the large momentum spike. So because of that, that is harder to see in our scale. The same thing goes for the RSI here, where we saw this huge momentum spike. Everything else is comparably smaller to this one, so that is harder to see. So because the RSI is waving up in neither the oversold territory nor the overbought territory, the RSI is not really telling me anything either. So that was my review on Lucid Motors stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you got any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching, and I hope you have a great day.